You're watching Dukascopy TV. I'm Elaine Stenson. The call for the European Central Bank to do something has been growing louder of late, mostly due to the threat of deflation hanging over the Eurozone. Hervé Goulletquer from Crédit Agricole Corporate and Investment Bank in Paris is on the line to look at this further. At various times since 2008, the Bank of Japan, the Bank of England and the Federal Reserve have all tried to jumpstart their economies by printing money to facilitate asset purchases. Why, if unemployment is stuck at 12% 6 years after the financial crisis began, has the European Central Bank not tried quantitative easing?
QE is a way to inflate the balance sheet, and if we look at the developments of the balance sheet since the beginning of the crisis, we have to say that it has been similar in Europe with the ECB than elsewhere with whatever Bank of Japan, Bank of England, or Fed. So the main difference is the way to inflate the balance sheet. It has been made through refinancing operation in continental Europe, while the choice has been in favor of asset purchase elsewhere. So why this difference? Simply because the way to finance the economy is different, mostly through markets, as in the US, or mostly through banking lending in Europe. So the question, what can ECB do in order to facilitate more lending by the banking sector?
Okay, Hervé, and while there has been a lot of talk of the threat of deflation in Europe, do you think that QE in Europe could lead to hyperinflation?
Oh, I think it is not a black or white story. What we have to know is that whatever, I will say, the effort to inflate the size of the balance sheet, if the monetary transmission from increasing the size of the balance sheet to increasing the volume of credit to the private sector, if this transmission mechanism is not working, at the end the impact on activity will be small, and very likely the impact on inflation also will be small. So I think that for the moment, where we stand in Europe with, I will say, limited development of credit to the private sector, the risk of, I will say, huge acceleration in prices, this risk is very, very small.
Okay, and what do you think are the chances of QE being introduced to Europe? And do you think that it would actually work?
I think that if we come back to your initial question, so financing of the economy in Europe is made through the banking sector. So if the ECB wants to be bolder, this is not through massive purchase of government bonds. It will be more through purchase of bundle of credit made to the private sector. So what it would imply? It would imply a precise perception of small and medium enterprise risk by the ECB, and also the possibility of a securitization process of these SME loans by ECB. So not quantitative easing, more credit easing, and the difficulty is for a part, yes, political will to do it or not, but more precisely the technical difficulty, how being sure that massive credit easing is possible. And I think that it stays for the moment an open question.
Hervé, thanks so much for joining me on the line today, and that's all we have time for now, but do check back later for updates throughout the day. Bye for now.